The RBA has left the cash rate on hold for the month of June at 4.35%, but this doesn't mean that we are necessarily out of the woods yet. RBA Governor Michelle Bullock has made it very clear that this isn't necessarily the end of the central bank's tightening policy. Bond traders have shifted their predictions to a 50% chance of another rate rise this year. The markets are starting to show confidence that this may be the last of the rate rises this year. However, we do expect to see rates staying on hold for a longer period of time before we start to see further cuts again. The key reason for the cash rate staying on hold has been better than expected inflation data and the property market downturn. And one of the biggest misconceptions at the moment is that there is just one Sydney property market, whilst the reality is that different markets are moving at different paces. If we put the spotlight on the Upper North Shore, particularly between Pymble and Wahroonga, we are seeing significantly longer average days on market, with apartments seeming to be faring better than houses. Specifically for houses, where generally speaking, the greater the price point, the greater the impact. The $2 to $3 million range seems to be bearing the smallest impact, with prices adjusting an average of 5 to 10% with longer days on market. The $3 to $4 million range isn't faring as kindly due to lower borrowing capacity in this range and buyers being a lot more selective in their choosing. However, the $4+ million range is where we are seeing a significantly lower volume of transactions and even longer days on market. New build homes in particular are transacting much less than this time last year. It's not all negative, however, as there is incredible opportunity in this market. There's never been a better time to buy as a result of reduced competition, more affordability, and increased selection. Changeover costs in particular are making it a great time to upsize and upgrade. We are also starting to see a shift in demand with less investors in the market as more families are looking to put money into their primary home, likely a result of some of the changes to capital gains tax and negative gearing. At a broader level, Sydney's real estate market has become a lot more cautious this year as a result of increased interest rates and affordability pressures lowering buyer confidence. Auction clearance rates have softened significantly. Recently, for the weekend of the 20th of June, we saw the clearance rate sitting at 31.9% according to SQM research. We're still seeing some great prices in the market. We recently sold number 9 Fairlawn Avenue in Turramurra in just 14 days for $3.62 million prior to auction. So with all the changes happening in the market, now is a great time to get an update on the value of your home. As always, don't forget to like and follow us on Facebook and Instagram. And if you do have any real estate needs, please feel free to give me a call today.